Welcome to another edition of Bitcoin Finance. In this episode, we discuss 7 myths about Bitcoin, which people only use to sell at a profit, and for that reason, it's essentially useless and unproductive. This is not correct. In fact, every day the Bitcoin network settles approximately $10 billion worth of transactions. There are millions of people around the world who hold Bitcoin and who do transact in Bitcoin, sometimes in smaller amounts, sometimes in larger amounts, and certainly in some countries more than in others. But if you look at countries where currencies or political systems are unstable, such as, for example, Nigeria or Russia or Belarus or Venezuela, you will find that Bitcoin is used at a very high level. Further, with new payment methods such as the Lightning Network that essentially transfer Bitcoin in a way that is frictionless and instantaneous, we will see the use of Bitcoin for transactions continue to increase. And then we're also seeing much larger payment providers such as PayPal and Visa and Square and MasterCard, etc., who are all also continuing to grow the technology that enables their customers to transact directly in units that are measured in Bitcoin. So yes, there are some people who buy and sell Bitcoin purely for the hope of making money, just like people who buy and sell stocks or gold or any other commodity. But Bitcoin by many is also used actively, not just as a store of wealth, but as a global currency. Number 2, Bitcoin is bad for the environment and wastes energy. Well, the first point to be made here is that whether or not the value that Bitcoin adds and the security that comes with that is a good or a bad thing for the world, but many people believe it's a positive thing. And yes, it does take a lot of energy to provide the security globally that Bitcoin provides. The way that Bitcoin is kept secure is that miners harness vast amounts of energy, and that helps secure the Bitcoin network. The computers required to do the mining do consume a lot of energy. And because the energy consumed by the production of Bitcoin is perfectly and accurately measurable, you will see a lot of statistics around the energy used, whereas of course the statistics around the current banking system and the servers and energy that go into all of that side of the financial system are not at all measured well. So we do need to bear in mind that just because something can be measured clearly and produces clear data, that doesn't necessarily mean that their consumption of energy is a bad thing just because it's transparent. But perhaps the most important thing to bear in mind is that the percentage of Bitcoin mining that is powered by renewable energy is increasing and continues to increase. Currently, around 45% of all Bitcoin mining is powered by renewable energy. So think of hydroelectric power, think of solar, think of wind, and over time, the carbon footprint related to Bitcoin mining will decrease, simply because as a function of efficiency, the miners need to move to the most efficient sources. And in the early days of mining, these sources may have been coal as an example, or other types of fossil fuel, dirty fuels. But over time, we will start to see vast usage of essentially free power from the sun. And you'll start to see companies and people such as Elon Musk, for example, with Tesla, building vast solar farms that help and capture sunlight, which then is turned into power, which is then used to drive these Bitcoin mining operations. So yes, a lot of power is used, but over time we will see that, I believe, more efficient and cleaner usage of energy become popular, purely as a function of economics. Then we hear as a common myth that Bitcoin is too volatile as a store of value. Well, I think the answer that a lot of people would say to that is twofold. First of all, just zoom out. You'll find that Bitcoin is not actually, in fact, a bad store of value. In fact, over a longer period, it's been an incredible store of value. It's been accretive in terms of value compared to over any other asset over the last 12 years. But there has been volatility. So we need to distinguish between short-term volatility and a longer-term trend. And most people would tell you that they anticipate that Bitcoin over time will continue to go up in value quite dramatically when measured in other assets or fiat currencies. But the journey there to that much higher value will have numerous ups and downs on the way. If Bitcoin is going to grow from $1 trillion asset into $2 trillion and $10 trillion market cap, it won't go there in a linear fashion necessarily. More likely, there will be ups and downs along the way. So the best answer I would suggest when people tell you about volatility is to tell them to zoom out. The more that you zoom out on a graph, the more you'll see that these sell-offs and rapid increases are basically smoothed out and almost become blips over time. Next thing that one commonly hears from naysayers is that the government will ban Bitcoin. Well, it's true that certain countries have tried to ban Bitcoin, but essentially it's impossible to ban what is in effect a mathematical calculation and algorithm which is on a decentralized public ledger. It's just an illogical and impossible thing to do. You cannot ban numbers, you cannot ban people's thoughts, and essentially all that Bitcoin is an algorithm on a decentralized ledger that's been recorded, which can be accessed by a person's thought or a password that a person has that represents their private key to that Bitcoin. So it's really quite difficult or impossible to stop or ban Bitcoin. Now, what governments could do is mandate that certain types of goods or services need to be purchased in fiat currency, or that taxes, for example, need to be paid in local currency, but it will be very difficult to stop individuals between themselves freely transacting in any type of asset or commodity or currency that they wish. In any country where Bitcoin has been banned, people could exchange goods for services, they can barter, they could use diamonds, they could use gold, they could use paintings, they could use apples, they could use eggs, they can use petrol, or any combination thereof. And there's nothing to stop them in practical terms from using Bitcoin. So that's what we've seen in all locations where the government has tried to ban Bitcoin. It's not possible. What governments can further do is, for example, try and regulate Bitcoin exchanges or impose certain measures on banks and institutions to require certain types of compliance measures to be applied to Bitcoin, just like they do with other types of trading. And that's what I think we will see. And these activities over time will help legitimize Bitcoin and bring it into a similar type of structure as exists around stocks or gold, as an example. So give it time, but these crackdowns will ultimately just fail. And the same applies to Bitcoin mining. If a government was to try and ban Bitcoin mining activities, that mining, of course, would just move offshore. It's like a bubble that you squeeze in one point and then migrates elsewhere. So mining goes to where it's most profitable, and as soon as you ban it in one place, it opens an opportunity up for miners to mine in other locations. Another common myth, and I think this is actually an important concern to have, is that the number of cryptocurrencies that can be created are infinite. So somebody can create another version of Bitcoin, a so-called altcoin, or you may have also heard of the term shitcoin. And there's a good reason why these terms are used, but Bitcoin is the one and only truth. It is the original store of value that was created, and over time we've naturally seen people who've tried to create their own versions of Bitcoin, and they've called it something else and something catchy, and tried to promote it by saying this is the ultimate coin for people to use for transactions on pornographic websites, or for cannabis, or this one is quicker, or this one can be used for paintings, and the list goes on and on. But ultimately, whilst there's nothing to stop any group of people from creating their own type of currency which among themselves they would use to trade, be it marbles, or be it cups of noodles in jail, or ramen, or toothbrushes, or shells, or earrings, or sports cards. None of these things have displaced Bitcoin. If anything, what they've done is created an interest in the blockchain and in cryptocurrencies, and ultimately all of these people that have bought these altcoins have learnt their lesson and gravitated towards what is becoming quickly and obviously already the largest and by far the best known and most stable form of cryptocurrency, which is Bitcoin. So we will see thousands, if not hundreds of thousands, of altcoins come and go, but over time the market will gravitate towards one ultimate asset class, and that has become Bitcoin. You'll start to hear, from time to time around new coins that will supposedly displace Bitcoin. All of this is largely hype. And I would caution anyone who gets brought into this world of altcoins to realize that ultimately these are hyped up coins. The money is made by those closest to the altcoin who launch it. And these are individuals who usually keep a big share of the coin to themselves and then dump it when the price has been hyped up. This is very different from Bitcoin, where the creator themselves and anyone after Satoshi had to mine Bitcoins, and no Bitcoin is kept by any individual company or at a centralized source. All of the Bitcoin is out there. All of the ownership is visible. So the next common one, number 6, is that central banks will create their own versions of cryptocurrencies or digital currencies. And the answer to that is yes, they obviously will. There's nothing to stop China or America or most large countries from creating CDCs, centralized digital coins. The difference really between any of these centralized coins and Bitcoin is that the centralized coins from the central banks will not be limited in supply. The banks will want to continue to be able to produce these coins to infinity, and that of course will diminish their value over time. Bitcoin, on the other hand, is a defense against that. It is perfectly limited, and it also comes totally free of all of the political biases that come with individual coins from individual countries. Furthermore, some of these centralized digital coins that come from central banks will have tracking mechanisms. If we look at China as an example, there may be a whole range of mechanisms that track who the coin has gone to, how it's spent. Maybe they limit on what the coin can be spent on. And some of these tracking measures are quite interesting and maybe quite positive. You'll be able to look at the velocity of money and track certain metrics. You'll certainly be able to tax people a lot better. Some would consider that a positive, some would consider that a negative. And to the extent that the money comes from the government for social welfare, you will be able to restrict how people can spend it. Maybe they cannot spend it on alcohol. Maybe they cannot spend it on junk foods. Maybe that certain portion or certain type of coin has to be spent only on educational areas or healthcare. So arguably it's a positive thing, but people will always want freedom of choice ultimately with how they spend and store their wealth. And this is why Bitcoin, if anything, the demand will rapidly increase as we see governments introduce their versions of digital coins. Further, the entire structure will become digital, people will start to understand and look at Bitcoin simply as an alternative to a digital currency of a country. And that again, in most places, should lead to an increase in the adoption and awareness of Bitcoin as a global alternative. The last thing you hear is that Bitcoin is a bubble. And the answer to that is that Bitcoin's price is determined by demand. So Bitcoin's price is always a perfect balance between how much supply there is and what people are prepared to pay for it. It makes as much sense to call Bitcoin a bubble as it does gold or any other asset which doesn't produce an income, such as a painting, for example. The reality is that Bitcoin's value is based on how many people want it and how much of it they want, and how much of that Bitcoin is available and how much will be continued to be produced. So if your basic view is that over time, the demand for Bitcoin, the number of people who want to own Bitcoin increases, or that the existing number of people who have Bitcoin will want more of it, or some combination thereof, then your view should be that the outcome of that will be that the value of Bitcoin as measured in alternative currencies, such as fiat currency as an example, or other assets, will increase over time. So I hope that makes sense. Look forward to speaking with you on the next episode, and you can use some of these arguments to help demystify some of the various myths or misconceptions that you may hear from people who are not familiar with Bitcoin. As a Bitcoin owner, if you already own Bitcoin, it's important that you get out there and advocate in favor of Bitcoin and dispel these myths. It's in every Bitcoin's interests, every Bitcoin owner's interests, that other people continue to adopt Bitcoin and that the total ecosystem for Bitcoin grows and becomes legitimized. So not just enough to own Bitcoin, you need to get out there and promote it. Speak to people, speak to your friends, family, neighbors, get involved in debates online, speak to economists. This is your chance for you to invest in an asset and essentially to grow that value of the asset by increasing awareness of the asset to other people.